Hey boys and girls, Siam here for another macro metrics video because the rising stock market is not an indicator of economic health. So we've got a lot to go through. I thought we'd go through a full health indicator roundup and then also show you or go through something where I was massively wrong and massively right, if that makes sense. And one big trade that I've just placed, and why I'm currently 11 grand down. But it's all okay. But before we do that, some things that made me chuckle. I found out that there's this vicious rumor going around. Basically, I've got a bunch of haters, which is fully understandable. I'm well aware that I'm very marmitey. But one of these haters has been spreading this vicious rumor that in 2018 I dodged the country. I ran away from the UK to dodge a tax bill. So it's just hilarious because I went on a 5-week holiday to Spain. So it just reminded me how dumb some people can be sometimes. The fact that HMRC are just going to give up if you have a tax bill. They're just going to give up as long as you go on holiday for 5 weeks. But yeah, crazy. So that was one thing. And no, I didn't have a tax bill. And I've been seeing some pretty interesting memes. So with Boris's new 6-person lockdown shizzle, this is one of them. And this is another. Anyway, let's crack on. Righty-tighty, so let's go back to Macrometrics 1 where I talked about pretty much everything, and these are the health indicators out there, so currency velocity, blah 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 blah. So I'm just going to whiz through some charts that go through all of these just to see, just put our finger in the pulse. And the first one is currency velocity. So if you go to the Federal Reserve website, what's it showing? It's still in free fall. So that's why they're doing huge amounts of stimulus, because they have to counteract this precipice of falling, if that makes sense. Oh yeah, the velocity of money is just no one is spending. So that's one. Moving on to the next one, which is sovereign corporate private debt. There are a million charts regarding debt. So one of them is, this one, non-financial corporate business debt securities loan liability and level. So what this is basically showing us is all the corporate debt out there which is not financial, so no banks, no insurance companies, etc. So this is pretty much everyone else. It's been a sharp, we've had a bit of a sharp uptake, as you can see here in 2020. Obviously this goes back to sort of 1940s-ish. And when you zoom in, you can see we've definitely since Q1 2020 we've had a sharp uptick in debt, which isn't surprising when the whole world decides to shave off or cut off its own limbs to try and protect something from Anyway, moving on. So that's debt. Also, when you're looking, so the next one is GDP, and GDP is interesting. So this is the GDP growth rate. So obviously, as you can see here, this goes back to the 50s. We have literally just fallen off the cliff in terms of GDP growth rate. I mean, as you can see here, annualized. So the US economy shrank by 31.7% in Q2 of 2020. And this is only going to increase, by the way. And this is the growth rate. So this isn't GDP. This is something which fascinates me. Well, it fascinates me and it doesn't. So as we can see here, the national debt of pretty much every country on the planet is rocketing. It's going up. In most countries, like thousands of dollars or pounds per second, etc. And just look at the US one. This is really rocketing. Now, back a few months ago, the GDP was also falling with all of the countries. Now, as we can see, GDP is going up. I mean, it's a mixed board. So the US and UK seem to be going up in GDP, but obviously nowhere near as fast. I mean, when you compare the UK's debt to GDP, I mean, the debt is outpacing everything. But there are some countries like Brazil. Look, this is falling big time. So it's it's a mixed bag. So that global debt. What about PMI, the Purchasing Managers Index? So this is basically the manufacturing world. Again, looking at the Federal Reserve website, as you can see here, it's dying, and it has been for a while. So when you look at US PMI, it's interesting. So in the big picture, we had this big old spike down. So let's zoom in to the 5-year chart. And then it bounded back up. However, we've gone back. We're starting to head back down in the US, simply because of all the craziness which is going on in the States at the moment. How with the whole Black Lives Matter type stuff, there are whole streets of shops just boarded up. And so obviously when you're locking down streets, businesses just can't manage. This is killing small business. All that's happening is a massive wealth transfer to, I guess, the bigger players like Amazon, etc. Meanwhile, the small businesses like you and I are getting absolutely hammered. So that's the US PMI. When we look at the Chinese PMI, it's a different story. It has rebounded, but I guess China have supposedly sorted themselves out and they're not too worried anymore, and the factories are back open, which is good. But the thing is, that's all very well and good, but if the demand isn't there, this is going to tumble again. So if we go into another lockdown and whatnot, then you're just going to see demand evaporate, and then there's going to be a bit of a surplus of stuff, just because it's just nuts. And this leads us to retail sales. Look at the US. So sales, obviously we had all sorts of stimulus in the US as well as the UK, but retail sales have plummeted. If we zoom in again, we are on the way back down. So and this doesn't surprise me. If we carry on, where are we? If we try and find that, look at this, delinquencies and bankruptcies. Look at all the previous macrometric videos. There's always a business where I'm showcasing where they've just cut off another arm. MGM has recently laid off 18,000 workers, which is just obscene. That's 18,000 people that can't pay their mortgage or rent now, or go shopping, or look after their kids, or whatever. It's pretty sad. And then when you're looking at all manufacturing, full stop. So I should have done this in the other way around. We're starting to have a bit of a tumble back to the downside. Let's zoom in a little bit closer. So that's that. What else do we have? We have unemployment. So unemployment is an interesting one. So in earlier videos, I've already explained how dodgy that is, because if someone is unemployed and they are still unemployed over a certain time period, I forgot the time period, over a number of years, and they're still unemployed, the way that they look at these statistics, that person is just basically discarded. So that person is no longer contributing to unemployment rates. That person is now terminally unemployed or whatever, so that person doesn't count anymore for some reason. So you have to take unemployment rates with a massive pinch of salt. But even still, the official figures are still saying that the rates are not unemployed. The rate has fallen to about 8.4%. Which, as a percentage of the US, when you take, the US population times 0.084, that's still 27 odd million people, which is insane. But this is where the I guess the discrepancies come in. So this is United States unemployed persons. The number of unemployed persons in the US decreased to 13,550,000, so that's 13 million. Sorry, 13.5 million. But long story short, it's dire. So I guess that's just a really quick update on the health indicators. This is a bit late, so it's 28th of August. This came out. I've been sat on it for a while. This is like a no-brainer. Not a no-brainer. This is obvious. The Bank of England is ready to go big and fast with QE should a second wave cause economic turmoil. Well, a second wave will probably cause some sort of lockdown, like the 6-person rubbish. And yeah, of course it's going to cause economic turmoil. However, at some point, Rishi's going to have to start charging bigger taxes to people. It's been give, so to speak. But where is the massive right hook that's going to come and fist everyone? We just, yeah, it's going to wake up a lot of people. People are dumb and happy at the moment, but it won't be like this for long. So that. The other thing I was talking about is why I was really right and really wrong. So back in March, I was looking at a whole number of charts, and I said, this was going back to the March lows, that we're going to have a stim pump, and then it's going to roll back down. So if we look at the S&P 500, if we just get the mothership open, this is what we see. So we had the stim pump. But normally, history tells us that we normally have sort of a pullback for at least the 50% level, which takes us, somewhere around this level, where we did actually have a bit of consolidation. We can see that the market was like going, do we don't? And then obviously the Fed were like printing and pumping it up, and the plunge protection team in the US just did a great job. However, so I was wrong there, because I thought we would start seeing a bit of a downside from around this area. But the FTSE, sorry, my phone is in the way, is a different story altogether. The FTSE has played out exactly the same way, because the Bank of England hasn't been as aggressive as the Fed. And what's happened here is we have, as I said to my members on the 3rd of September, we will 100% guaranteed hit this level. And I always put my mouth where my money where my mouth is. So I've actually placed in a bit of a positional trade here at the moment. So I'm shorting the UK stock market. It's the weakest of the indices. Well, mind you, the Spanish stock market seems pretty darn weak. But the FTSE looks weak. So I'm underwater at the moment. It's a pretty big position. So I'm only 117 points down, but I've gone in at £100 per pip. So if we look at my actual account, what is this? A new trading tool we've got here. Where is it? Come on. Yeah, so I've gone in £100 per pip, currently 11,700 down. I'm not too fussed. When this plays out, I'm taking a pretty, I think, a safe level to. I can't see this going down in a oneer. So what I think will happen is we'll have a bit of a pop to the downside before some stimulus will kick in, and then we'll have maybe a bit of a rally. But I'll assess as we go. But if we hit this target, that should be a nice 38 grand win. So that's it for now. I think, have I forgotten everything? Yeah, I think that's it. So have a great weekend, and I will see you soon. I can't think of anything else. Bye.